Lately, news outlets have been bombarding us with talks of recession as if it were a going out of business sale. Well, that might not be the most apt analogy, but you get the point. And I do realize that there's a bit of irony in me talking about a lot of recession talk and then also talking about recession. But that's neither here nor there. It did get me thinking about which industries do well during a recession and which industries do poorly during recessionary times. There are a couple of different reasons why we might want to know the answer to that question. A few that I identified were investment opportunities. Anything I share in here, of course, is not financial advice. Another reason would be awareness for job prospects. So if you are looking to move to a new job, maybe identifying industries or companies that are a little bit more recession proof, can offer a little bit more job security if that's something that is important to you. Then on a business side, if you work with different suppliers or customers, knowing their industries that they're in and how they might be impacted by the business cycle obviously is going to have an impact on you and your business. So knowing that ahead of time can help you be prepared for that pending situation. My hypothesis on which industries will do well in a recession and which won't really comes down to the fundamental principles of needs versus wants. So goods and services that are considered more of a necessity will do better in a recession, and goods that are considered more discretionary or wants will do worse. And I think this sort of comes back to the fundamentals of economics and sort of the elasticity or the inelasticity of demand. And you are in an inelastic industry, then that's great for you. That means your demand is going to stay high even in a recession. If you are in more of a demand elastic situation, then you could be in for a rougher ride. The next step in the process was to look for research and data that would either prove or disprove my hypothesis. And I came across this analysis done by State Street Global Advisors that looked at sectors and how they performed in different stages of the business cycle. And they looked at not only recession, but sort of 4 different periods that they identified as recession, recovery, expansion, and slowdown. To identify the changes in the business cycle, State Street Global Advisors used a composite index of different economic indicators to see shifts in the business cycle throughout the economy. I'm just going to focus on the results from the recessionary section. I'll link the paper so you can take a look at the other different parts of the business cycle if that is interesting to you. What I found was that my hypothesis held true based off of their results in the paper. The best performing industries or sectors that they identified were consumer staples, healthcare, utilities, and energy to a lesser extent. And that makes sense to me. Those industries are all fairly inelastic in their demand. Consumer staples covers food. Everyone has to eat. Healthcare doesn't discriminate during times of recession or not. Certainly there are some people that will hold off going to the doctor if they don't have the money to pay for it. But I think in general, the people who are using the healthcare system the most are older people who are going to be covered by Medicare and Medicaid, things like that, that'll be covered. So that makes sense. Utilities, same thing. People have to have energy at their homes for heating and lighting, things like that. Energy is identified as a little bit weaker than those previous 3. And I think that has to do with the fact that the energy market is a little bit more vulnerable. There are certainly manufacturers that use a lot of energy, and they can be down during recessionary times, so that can impact the energy sector's profits. And the energy sector on a whole is a little bit more beholden to OPEC, which is a massive cartel that controls a lot of the oil production in the world, and they can sort of dictate prices regardless of whether it's a recession or not. So depending on their policies during that time frame that can impact how well energy companies do. The worst performing industries during a recession are real estate, technology, industrials, and to a lesser extent, financial companies. Again, all of this makes sense to me. The real estate industry is especially vulnerable to recessions because when you have businesses failing, that means they are defaulting on their leases, on these commercial leases. And in the case of residential, you have people delaying moving or moving into a new home, building new homes, and that hits that industry particularly hard. And that bleeds over into the financial industry, which is servicing these loans that are supporting this commercial and residential real estate. In this pending recession, the financial industry is also once again vulnerable, I believe. We saw the two banks, Silicon Valley Bank and Signature Bank, collapse early on. They are sort of exposed to this interest and duration risk from the Federal Reserve's changing interest rate policies. So that's something to be looking at and concerned about if a recession actually comes. For the technology and industrial sectors, I think the story is similar. It's easier to sort of delay these purchases that are a little bit more of durable goods or services when money and conditions become tighter during the economy. For technology, I am a little bit concerned about some of these companies that have risen over the last 15 years under the era of sort of fast and free money. A lot of them aren't profitable and have been focused more on growth. And I think that might come to roost if a full-blown recession actually comes. So that's something to watch out for and be concerned about with tech industry.